In farming, a corporate buy-sell agreement can be funded with life insurance to keep the business in the family with both on-farm and off-farm heirs. However, questions often arise over the impact that it can have on the value of the company and gross estate. Roger McEowen with the Washburn School of Law joins us now with the very latest on this topic. Good to have you with us, Roger. Let's start with some background on the buy-sell agreement and just how it works.
Well, good to be with you today, Tammy. A buy-sell or a stock purchase agreement is really a key document in planning, and one way it can be used is to provide a market for the stock of a family farming or ranching company upon the death of a senior family member. The corporation, what it does is buys the deceased family member's stock.
So what do farmers need to know when it comes to actually including life insurance proceeds in corporate value?
Well, that stock purchase agreement is often funded with life insurance that the corporation owns and is payable to the corporation when the insured shareholder dies. That's what provides the funds to buy the shareholder's stock and keeps it in the corporation for the next generation owners. Well, the issue is whether the proceeds increase the corporation's net worth. And another issue is whether then that increased value is reflected in a higher stock value in the deceased shareholder's estate. And both of those have tax consequences.
So you have some examples you can share with us?
Well, yes. Recently, a federal court in Missouri included the proceeds of the life insurance in the corporation's net worth in this type of a setup. And it was also reflected, the court said, in a higher valuation for the decedent's estate, which meant more estate taxes that the IRS could pick up. The stock purchase agreement, they said, didn't set the value because it wasn't done precisely correct. Well, that's the result the Missouri court came up to. That's contrary to two other federal court of appeals decisions that said the corporate value was not increased. So we may have a discrepancy here. If this case is appealed, it'll go to the 8th Circuit. The other two circuit courts are the 9th and the 11th Circuit. We could have a circuit split coming up.
So what's the big takeaway here?
Well, all of this is really technical. Buy-sell agreements, stock purchase agreements are great tools for transitioning the farming or ranching operation to the next generation, but you have to make sure you get good estate planning and business planning advice to pull it off correctly.
Good advice. That's Roger McEowen with the Washburn School of Law. Thank you so much for being with us today.